Welcome to Singapore Property Talk Law. Before we jump in, make sure you like this deep dive and subscribe to the channel. That way you won't miss our latest explorations of the Singapore property market.
Absolutely. Good to be here.
So today, we're zooming in on something quite significant in the commercial space.
A portfolio of 6 prime HDB shophouses. Big news.
Yeah, just hit the market, and the total value, a hefty $73 million.
It's a serious number, and these aren't just any random shophouses, are they? We're talking mature estates.
Exactly. Toa Payoh, Mo Kio, and Tanjong Pagar, all high footfall areas.
The kind of spots businesses want to be in.
Right. So our mission today is to unpack this. What makes this portfolio unique? Why is it getting attention now?
And what are the key takeaways for anyone interested in commercial property here, or even just watching the market?
Let's start with the basics. What exactly is being offered here?
Okay, so it's 6 HDB shophouse units in total.
Right.
One is at 190 Toa Payoh 6. Then you've got 2 over at 702 and 705 Mo Kio Avenue 8. And finally, 3 separate units down at Tanjong Pagar Plaza.
And Savills Singapore is handling the marketing, I understand.
That's right. Marketed by Savills. And importantly, you can bid for them individually or, go for the whole $73 million portfolio.
And it's via private treaty.
Yes, private treaty. So direct negotiation between buyer and seller. No public auction for this one.
Okay, location is always crucial. Let's talk about why these specific locations, Toa Payoh, Mo Kio, Tanjong Pagar, are considered prime.
Well, all 3 are really well connected. You've got excellent access to MRT stations, the town centers themselves, amenities. It's all there.
Which means people. Right. Lots of people moving through.
Exactly. High footfall. That's driven by the dense housing estates nearby, the transport interchanges, and the existing retail hubs. It's a built-in audience, almost.
Let's break them down. Toa Payoh first, 190 Lorong 6. What's the story there?
So that's a ground floor unit, about 1,033 square feet.
Okay.
A key feature is the sheltered access. Straight to Toa Payoh MRT and the bus interchange. Very convenient.
And it's already subdivided?
Yes, into 3 smaller units, and they're all fully leased out currently.
Smart. And that proximity to HDB Hub and the interchange must be a constant draw.
Huge draw. And apparently it's generating a yield of over 4%.
Over 4%? That sounds pretty decent for a location like that.
It's considered quite attractive, yeah. Especially in this market. Now, moving north a bit, Mo Kio Avenue 8. 2 units there.
702 and 705. These are larger, aren't they?
Significantly larger. We're talking roughly 4,000 square feet for one and over 1,600 for the other. And these span 2 levels.
2 levels, so there's space upstairs.
Yes, with residential quarters above the commercial space. Mixed-use potential there.
Ah, interesting. And location-wise in Mo Kio?
Right in the town center, next door to the bus interchange, AMK Hub. All linked by sheltered walkways. Prime spot.
The visibility must be good, too.
Excellent visibility. They have wide street frontage along the main pedestrian mall there. And like Toa Payoh, fully leased at the moment.
So immediate income?
Immediate income, yes. And it's quite a rare chance to get such a large retail footprint in Mo Kio, especially with, the rejuvenation plans happening and more housing coming up nearby.
Potential for future growth, then. Okay, finally, Tanjong Pagar Plaza. 3 units.
Yes, 3 individual ground floor units. Sizes range from about 600 square feet to just over 760 square feet each.
And their position within the plaza?
Arguably the best spots. Right near the entrance and the pedestrian drop-off. Maximum exposure.
Can't miss them.
Pretty much. Plus, they have good frontage onto Tanjong Pagar Road itself. And a huge bonus.
What's that?
They're right beside the NTUC Fair Price supermarket.
Ah, the supermarket factor. That's almost like a cheat code for foot traffic, isn't it?
It really is. Anchor tenants like NTUC just pull people in consistently. It guarantees eyeballs on your shopfront.
Makes sense. Now, why are these HDB shophouses generally seen as such good investments? They don't come up often.
Well, scarcity is a big part of it. There are only around 8,500 privately held HDB shophouses in total across Singapore. Relatively speaking, yes. So they're very tightly held assets. Owners tend to hang on to them.
And the yield we mentioned, around 4% across this portfolio.
Approximately 4% gross yield for each unit, yes, which offers immediate income.
Plus potential upside.
Definitely. You've got potential for rental reversion, basically increasing rents when leases renew, or maybe even further subdividing the space, like in the Toa Payoh unit, to boost yield.
And a big one for investors, no ABSD, right?
Correct. Commercial properties like these don't attract the additional buyer's stamp duty, which is, what, 60% now for residential for many buyers.
A massive difference if you're comparing asset classes.
Huge difference. Makes them much more appealing from a pure investment cost perspective for certain buyers.
So, summarizing the appeal of HDB Shophouses, it's the captive market in the estates.
The local residents.
The locations near transport and amenities like that. Crucial supermarket.
Ensures steady traffic.
And the scarcity factor. Let's quickly recap the individual asking prices again.
Sure. Toa Payoh, the 1,033 square foot unit, is $12 million.
Right.
And Mo Kio, the big one, 4,037 SQ Fit, is $36 million. The smaller one, 1,647 Seraphi feet, is $10 million.
Right.
And then the 3 Tanjong Pagar units are $5 million each.
Adds up to that $73 million total. Makes sense when you break it down. Now, the timing. Putting this portfolio on the market right now seems interesting given the economic climate.
It is interesting timing. You could argue that investors are actively looking for more defensive assets right now, things that offer predictable income streams.
Like stable rent from commercial properties.
Exactly. Potentially seen as safer than maybe banking on resale gains from, say, luxury condos, which can be more volatile.
And commercial tenants tend to stick around longer.
Generally, yes. Businesses often sign longer leases, and relocating is disruptive and costly for them. They tend to be stickier than residential tenants.
But there's a flip side, surely. What if the economy really slows down?
That's the risk, absolutely. You have to consider the impact on the tenants themselves. A downturn could lead to vacancies if businesses struggle, or at least put downward pressure on rents. So while it's stable, it's not completely immune to wider economic headwinds.
It's about balancing that potential stability against the health of the tenant businesses. Okay, wrapping up then. $73 million. Is it a massive ask, or is this a genuinely rare chance to grab prime commercial space in these heartland hubs?
Well, looking at everything we've discussed, the locations, the scarcity, that roughly 4% yield, it does present a compelling case.
The established nature of these estates, the connectivity it offers a certain resilience.
Definitely. That resilience might be particularly appealing right now, given the economic uncertainty we mentioned.
So whether you're an investor hunting for yield or just, fascinated by how Singapore's commercial property market works.
This portfolio is a really interesting case study. It brings up questions about long-term value in these mature, well-connected areas.
What stands out most to you about it? What should people be thinking about?
For me, it highlights the enduring appeal of necessity-based retail locations. Being near transport, housing, and especially supermarkets, that seems to be a timeless formula for commercial success in Singapore.
A good point to ponder. Thanks for joining us on Singapore Property Talk Law. We hope this gives you some food for thought.
Keep exploring the market.
And don't forget to like and subscribe.